Breaking news from the US, Ripple has just taken a major step that XRP holders need to understand. What is going on, XRP Army? Welcome back to the channel. We have a red alert situation developing on the blockchain right now. If you follow the whale alerts, you saw it. If you follow the on-chain trackers, you felt it. Ripple has just taken a major action involving their escrow accounts and US custody wallets. And frankly, it has the entire community on edge. We are talking about the movement of hundreds of millions of XRP valued at over $500 million, specifically into US-based institutional custody wallets. The headlines are screaming dump incoming, but if you scratch beneath the surface, the data tells a completely different story. This isn't a dump, this is a deployment. In this deep dive, we are going to expose the real reason Ripple is positioning this massive war chest of XRP in the United States, why this move is directly linked to the new ETF demand, and why the fear you are feeling is exactly what the institutions want you to feel before the supply shock hits. Let's start with the on-chain anomaly. Typically, Ripple's escrow unlocks happen on the first of the month. They unlock 1 billion, keep a small portion for ODL, and lock the rest back up. But this month, the pattern broke. A significant portion that is usually relocked was instead diverted to be Standard Custody and Trust, a US regulated custodian that Ripple acquired. This has XRP holders on edge because historically, when Ripple moves coins to an exchange, it creates sell pressure. But Standard Custody is not an exchange. It is a vault. You don't move gold to a vault to sell it on the street corner. You move it there to sell it to a sovereign buyer or a massive institution. This suggests that a deal has been struck, a deal that requires clean US domiciled XRP to be available immediately. We need to talk about the ETF liquidity crunch. We know the spot XRP ETFs, Bitwise, Canary, are live. We know they are sucking up liquidity, but here is the secret. ETF issuers hate buying from public exchanges like Coinbase. It slips the price too much. They prefer over-the-counter OTC deals where they buy a bulk block of assets at a fixed price. The major action we are seeing is likely Ripple preparing a massive OTC block sale to an ETF issuer or a major US bank. Why does this have holders on edge? Because the sheer size of the transfer is intimidating. But think about the mechanics. If this XRP goes directly to an ETF, it never hits the order book. It never creates a red candle. It simply moves from Ripple's pocket to BlackRock's pocket, hypothetically. This is off-market accumulation, and it is the most bullish signal possible. Furthermore, let's look at the US strategic pivot. For years, Ripple kept its XRP holdings offshore to avoid SEC scrutiny. The fact that they are now boldly moving these assets into a New York chartered trust company is a massive flex. It signals to the market, we are compliant, we are fearless, we are open for business in the USA. This action removes the regulatory discount that has suppressed the price for 5 years. The market is on edge because it's not used to Ripple playing offense in the US. We are used to defense. This shift to offense is disorienting, but it is exactly what we need to break the 2.0 resistance. We also have to address the stablecoin backing theory. Some analysts believe this major action is related to the Ripple stablecoin, RLUSD. To mint billions of RLUSD, market makers need XRP inventory to facilitate the swaps and liquidity pools. By positioning this XRP in the US, Ripple might be seeding the liquidity for a massive RLUSD expansion on US exchanges. If this is true, that XRP isn't being sold, it's being utilized. It becomes working capital for the network. Working capital doesn't get dumped, it gets locked. Finally, look at the psychological warfare. The timing of this move, right as XRP is testing key resistance, is designed to shake out the weak hands. They want you to see the big transfer and panic sell. Oh no, Ripple is dumping. If you sell now, you are selling your coins to the very institutions that requested this transfer. The edge you are feeling is the friction of wealth transfer. Stand your ground. Now, let's pivot to the mechanics of what happens next. The supply shock. If my analysis is correct, and this XRP is destined for institutional custody, ETFs, or banks, then it is effectively being burned from the circulating supply. An ETF doesn't day trade. A bank using it for ODL reserves observes, doesn't day trade. That XRP goes into a black hole. Now, look at the public order books. The available float on exchanges is already at multi-year lows. If you remove another 300 million XRP from the equation via this OTC deal, the sell-side liquidity collapses. This means that when retail FOMO kicks in, there are no coins left to buy. The price has to jump from $2.0 to $2.50 to $3 just to find a seller. This is the supply shock thesis, and this major action is the trigger. Let's discuss the 21 shares in Fidelity rumors. Following this major on-chain movement, rumors have intensified that Fidelity, one of the largest asset managers in the world, is preparing to launch its own XRP product or custody service. Fidelity requires assets to be held in specific compliant US structures. Ripple moving assets to standard custody fits this requirement perfectly. If Fidelity enters the chat, the game is over. We aren't talking about millions anymore. We are talking about trillions. This is why holders are on edge. The anticipation of the big announcement is palpable. We also need to talk about the price compression. XRP has been coiling in a tightening range for months. Volatility is at historic lows. This on-chain movement is the pebble in the pond that creates the wave. When volatility returns, and it will, it often moves in the direction of the institutional flow. The flow is into custody, not out to exchanges. Therefore, the probability of an explosive move to the upside is significantly higher than a dump. The 2.0 level is a pressure cooker lid. This major action is turning up the heat. Furthermore, let's look at the derivatives market reaction. Since the news broke, we have seen a spike in short positions. Traders are betting that this transfer means a dump. This is the perfect setup for a short squeeze. If the price ticks up instead of down, those shorts will be underwater instantly. They will have to buy XRP to cover their positions. This forced buying adds fuel to the rocket. We are looking at a potential cascade of liquidations that could send us to 3-month SOHRs in a matter of days. Let's address the narrative shift. For a long time, the narrative was Ripple dumps on retail. That was the FUD. The new narrative is Ripple supplies institutions. So this is a critical distinction. Selling to retail suppresses price because retail has weak hands. Selling to institutions supports price because institutions have diamond hands. This major action confirms the narrative shift. We are witnessing the maturation of the XRP market from a retail casino to an institutional asset class. Finally, we have to touch on the global context. While this action is in the US, the global demand for XRP remains near all-time highs. Japan and Korea are buying aggressively. The US moving supply into custody means there is less supply for the global market. This global competition for a scarce resource is what drives the super cycle. You have the US hoarding XRP and Asia fighting for what's left. That is a recipe for 5.0 plus. So XRP holders on edge. Why? Because change is scary. Big movements are scary. But in investing, comfort is the enemy of profit. If you are comfortable, you are probably late. The fact that this move makes you nervous is a good sign. It means we are at a pivot point. The major action Ripple took is a strategic deployment of assets to satisfy US institutional demand. It is bullish, not bearish. What is your strategy? My strategy remains unchanged, but my conviction has increased. I am watching the 190 2.0 support zone. If the market panics over this transfer and we get a wick down to 180, I am buying with both hands. This is likely the bear trap before the breakout. I am not selling a single XRP until we see price discovery above 384. Why would I sell to BlackRock at $2 when I can sell to the FOMO crowd at $10? Know your counterparty. Right now, the counterparty is smart money. Do not sell to smart money. A critical warning on FUD and fake news. In the next 48 hours, you will see headlines saying Ripple moving funds to dump or insider selling. Look at the source. Is it a reputable on-chain analyst or is it a clickbait blog? Verify the destination of the funds. If they went to standard custody or Medico, it is not a dump. It is custody. If they went to Binance Hot Wallet, then maybe worry, but the data shows custody. Do not let the FUD shake you out of your position inches from the finish line. Let's talk about the end game. We are in 2026. The ETFs are live. The banks are integrating. The US is waking up. Ripple is moving its war chest into position. This is the end game of the accumulation phase. The next phase is the markup phase. The edge you feel is the adrenaline of the launch. Embrace it. The bottom line is this: Ripple's major action in the US is a signal of strength, not weakness. They are preparing for a massive wave of demand that cannot be met by the current public supply. They are positioning their inventory to feed the institutional beast. You hold the same asset the beast wants to eat. Hold it tight. Thank you so much for watching this urgent deep dive. If this analysis helped calm your nerves and clarify the situation, please destroy that like button. It helps us fight the FUD. Subscribe and turn on notifications, because if that XRP moves again, I will be the first to tell you. Stay strong, stay safe, and I will see you on the moon. Peace.